How do you make money in Wall Street? That's what we're going to talk about today. How do you make money? Well, it is simple as buying and selling. It's the old advice of buying low and selling high. 2 clicks, okay? In today's day and age, 2 clicks can make you rich. Buy and sell. The secret is you need to know what to buy and you need to know when to buy and when to sell. But it's as simple as that. Buying and selling. Everybody who trades in Wall Street is just buying and selling. An investor who holds to a stock for years is just doing that, buying and selling. Okay? Now, let's dig a little bit more. With buying and selling, there is a very important component, which is the price, okay? If you want to have an advantage about that mechanism of buying and selling, you need to learn something about the price of assets in Wall Street. So before we even go there, let me simplify it a little bit more for you. Before we even focus on stocks, let's just say we're talking about something simpler like this pencil here. Say I am selling this pencil to you, okay? And I say to you, I'm selling you this pencil, or I would like to sell you this pencil for $1,000. All right? Now, the majority of you, unless there is somebody out there who wants to pay $1,000 for this pencil, but the majority of you will say, no, are you crazy? Why are you selling this pencil for $1,000? And I will say, why? Well, come on, yesterday this pencil was, 50 cents, 25 cents. So yesterday, last month, last year, it didn't cost that much. Okay, so what you're focusing on there is the element of the history of the price. You see, price have a certain history. It's what we like to trend when we trend stock prices, okay? You sort of like can go back 1 year, 5 years, the entire lifetime of the company and see how the price of a stock fluctuated. So price history determines or have some weight on determining the price that people are willing to pay for in the future. Remember, our aim is to understand the price because we want to understand when to buy and sell. So history is very important, history of the price. Then the next thing that is important is, you can come back to me and say, well, I'm not gonna buy this pencil for $1,000. And I will say, why? Well, somebody else next door is just offering it for 25 cents. Well, what is that? That is supply. There are other offers out there in the market, other people selling the same product at a lower price. okay? So you being a smart buyer, you're not gonna buy it from me for $1,000. But then if there were none offers out there competing with me, I will be the only one. So the demand will be high if there are people who are interested in buying this pencil. Let's say this is a very special pencil. It's very special to me, but it's gotta be very special. And then there is demand. So then the price is affected because more people want it. Okay? So supply and demand, we heard it before. That plays a very big role on the price. Okay? Why are we focusing on price? Because price is very important, because we're buying and selling. We want to know the price. The third thing about how to determine a price or the price of something is, well, you could say to me, I'm not gonna buy this pencil for $1,000. And I say, why? Because it only costs, 2 cents to make it. So the cost of manufacturing determines the price. Okay? Or at least I know that if it costs me 2 cents to make this pencil, I'm not gonna sell it to you for 1 cent, because I'm not in the business of losing money. You get it? So cost of manufacturing, the cost of putting something out there, determines the price. All right, so you sort of know something about determining the price of something, of things out there in the world. A car, a house, a pencil. But you see, it is an art to determine the price of an asset in Wall Street. It can be very complicated. It can be simple for some people, but it's definitely an art. Now, you can learn it. But we want to understand why it is important and how it impacts our ability to make money. Okay? So in Wall Street, what we're doing is we are trading, buying and selling stocks, which are assets. What is an asset? It's something that we purchase that will make us money in the future. So people say we value an asset based on the future cash flow that asset can bring. That is how people determine the price of a stock. We talk about the spend a lot. You know how to price other things in the world, in your life, but you need to know how to determine the price of an asset. And that's how they do it. They look at the future cash flows. Now, we're gonna talk about cash flows in the future. I'm gonna explain all of that to you, of course, in other videos, but you have to know that when you're buying an asset, you are buying it because that asset will bring you money, okay? So that is why you need to understand the price. Because you need to understand, have you make the right decision when you bought something? When you buy something, you need to understand, did you overpay? Did you underpay? All right? If you just FOMO in and you just buy because other people are buying, yeah, You may make some money, but your chances are slim to none. But if you bought something because you saw the value, not only did you make a good purchase, but when things are not that good, and maybe the price goes even lower of what you pay for, you're gonna have, a relaxed time holding on to that asset because you know the value of that asset. All right? And that is why it is important for you to learn to determine the price of an asset. That is one half of the transaction. Now, I'm not gonna sugarcoat it to you and say that's all. The other half of the transaction is the selling part. And this is very interesting because, so let me explain it to you how it is. In Wall Street, there is this whole mindset of what something costs, which is the price. And since you know or you will learn how to price something, you buy something, but then you are hoping that other people also know about the system of pricing, about those multiples. Normally it's the PE ratio, the price to earnings ratio, which we're gonna talk about. But you are hoping that other people also know that mindset. Okay? Other people also think that's valuable because you need to sell it. So in Wall Street, there is this phenomenon that is so interesting to me. A few years ago, there was this flourishing industry of value investing. And there were all these value managers that all they did was looking at companies, basically assets, and determine the right price for them. And if something was quote unquote undervalued, they will buy it. And then they will hold on to that. And then other people will quote unquote discover that asset. And hey, we want to buy some of this, they will say. So then they will just go ahead and sell it at a higher price. But you see, the trap there is that they have to be other people that also discover these assets and also go about valuing these assets in the same way that these value managers were when they purchased the assets. So there is this very famous value investor. His name is David Ahern. I like to hear interviews from him. He talks about how this value investing strategy have changed over the years and how sadly, a lot of value investors also have lost their jobs recently because you see, here is the interesting part. Not because what they were doing is wrong, but it's because other people stopped doing what they were doing. Other people stopped buying what they were selling. Okay? So just the lesson learned for you to learn there is when you buy something, you need to know the right price that you're buying it at, but you are counting on that other people will also think in the same way that you did, and they will want to buy what you have. okay? Now, my strategy is not that. It's a little bit, but probably on the buying side. But honestly, I'm not one of those people that just buy something and is willing to hold it for decades until I can sell it again at a profit, because let's be honest, there are countless numbers of stocks that I can show you how have not changed in price over a decade or 2 decades even. So if you are just counting on price appreciation because somebody else is willing to buy what you have at a higher price, then you're probably gonna be waiting a long time on some stocks. So my strategy is not that exactly, but I do want to share with you my strategy. For that though, please stick around, subscribe. I will appreciate very, very sincerely if you can subscribe, because I have a very powerful message that I want to share with you. Okay? I'll see you in the next video.